Hello, everybody. Welcome back to the Prospero.ai stock market live streams. I hope you all had a wonderful weekend. As you're all tuning in here today, be sure to like the stream, whether you're watching on YouTube, Twitter, if you're watching live or in the future. Let's get those like numbers up. We are seeing a split open to the market here today. The QQQ has gone in the green now, just barely. But the SPY and the Dow are red. While again, something to note, the Russell is still the leading index and up 0.2% on the day here today. So small caps are having a bit of life come back into them here. I'm going to run through the topics for you all now, and then we'll be getting into them in just a few moments when George gets in here. And we're going to be back in the groove for officially today. We'll have the model portfolio update at the end of the stream, and we're back at our normal time. If you guys are new to the Prospero live streams, we go live Mondays, 11 a.m., and Wednesdays, 3 p.m. So today, we'll start off with some of the tariff headlines that have been swirling around, the QQQ and SPY net option sentiments that we're seeing in Prospero, and just how George is feeling about the current market. Seems like from everything I've been reading, we're having very low volume days in the SPY and QQQ, so kind of just a melt up at the current moment. We'll get into some of the headlines swirling around Jerome Powell and the Fed. And there is CPI tomorrow. So what do we expect that to do for the market? And also earnings this week. A lot of the banks will be reporting, but also companies like PepsiCo and Netflix. So which are we going to be looking at the closest? Which are going to move the overall markets the most? And how do we expect them to go this week? Then we have some AI stories to get into. It seems like AI acquisitions are at a premium right now. We have Google and Meta making more moves, both acquiring rights and different teams and people. And we'll fill you in on all those details when we discuss them later on. But my question for George also later is, it seems like a lot of these big tech companies are they're not acquiring the companies outright, but they're acquiring the talent of the team. So my question for him is that a usual thing, or are we seeing a different kind of acquisition of this AI technology? And why does it seem like the people and the team behind the company is more important than the company's product or service or tech itself? So we'll get into all of that good stuff in just a bit. We'll also discuss Amazon Prime Day sales. So last Wednesday or Thursday, I'm forgetting when we were live last week now. I think we were live Thursday. We covered the day one sales, which are down dramatically. So we have an update, but I won't give it away just yet. I'll make you all stick around till then. But there is a final total, which we will be getting into. I see a question from Jill in our YouTube comments. How is upside calculated? So when George gets in here, we'll go through that with you. But for everyone's information, I don't know if this would be, if you guys know about this, but if you're in the Prospero app, you can click on a signal. If you like looking at any stock specifically, you can click on the upside button and it'll bring up a little description of what's going on there. So let me read the one for upside for you, Jill. Hello, George. Welcome to the stream.
Hello.
A long-term signal that ranks stocks or ETFs by their potential for significant price gains. Stocks with high upside indicate investors expect good returns, which along with other signals can make for a good long-term bet. And then if you want to get more detailed information, you can swipe up on that signal in the Prospero app, and it'll go through a much more detailed breakdown of like what the signal is doing, tracking, and how a little bit of the behind the scenes is done. Two more topics that we will cover today towards the end. Warner Bros. Stock, which just had a success in the box office for Superman. I just realized we got to get George into the big box. And then last but not least, crypto, with Bitcoin hitting over 120,000 for the first time. We'll cover that space again, the miners, MSTR, Coinbase, which is looking the best right now. But without further ado, let's check SPY and QQQ net option sentiment at the beginning here, and then roll into the topics. So we are seeing QQQ remaining above the bull bear line of 40 at 55, so showing strength there. But the SPY is creeping back lower down to 4 here today. And I think that's, yeah, just about the bottom of the range it's been at. It's been popping around a bit, but it's been in like the teens, 20s a little bit here and there. So 4 is a little bit lower. How are you feeling today, George? We're seeing a mixed market opening up here. We're going to get into some of the headlines maybe that are causing it. Anything changed much over the weekend with your view?
Yeah, I mean, it's a very interesting time in the market, right? The letter that we wrote, really highlighted why it's an interesting time, right? I mean, all the tariff news over the weekend, if it was months ago, like it would have set the market spiraling down. But it's a pretty green day, and I think that's basically the other thing that we're talking about, which I think the market is just very bullish on the big beautiful bill. So we have both of those. We have both of those forces working, like especially, we'll talk about crypto, some of the other things that are really, some of these risk assets that are really driving it up. But yeah, I mean, I just think it's what we're saying. And a quick summary of what we were talking about in the letter this weekend is that, we believe that originally the risk models, the Wall Street risk models, were forecasting economic difficulties around the tariffs. But now that the tariffs have seem like more of a negotiating tactic than an actual policy that's going to be followed through on. The market, the risk models are just not modeling the same higher probabilities of those things happening. So I think that's what we're looking at, but it also makes it tough because the closer these things get to actually going into force, maybe they go into force for a little while like last time, the risk models will have to take them more seriously. And especially at all-time highs, it's really hard to tell, how much those will actually be affected. So, we are doing kind of well with our long short right now. We're 7 long, 7 short, and that portfolio has performed pretty well. So we're not messing with success too much. But yeah, we do have a lot of risk assets, Robinhood, Palantir, ASTS, SNPS, all those I would consider to be a lot more risk than we typically have in the portfolio, but it's going well for us.
So you talked about the risk models not taking the tariff threat seriously, and I think a lot of the dates have been pushed to August 1st. But I feel like it's a tough spot now because the market has, now achieved all-time highs. So does the, percentage of like outcomes weigh to the downside now more because we've already like made this big bull run since we hit the bottoms? And also, if the risk models are not factoring in the tariffs, like they're kind of taking it as like a boy who cried wolf, does that set up a potential like volatile move lower when it actually, if it does actually come true? Because then they have to like price it all in like super quick if it's actually a reality at that point.
Well, a few things about that. One, I think the big beautiful bill is creating a higher floor for the market. I think just it's very easy to look at, kind of more money in the hands of the pockets of wealthy individuals going into the market, higher corporate profits because of lower taxes, buoying the market. Those are very, very strong bull signals. So even if it does happen, and you have to remember, like risk models, it's not a binary, like tariffs, no tariffs, right? Even if these things go into effect, I think it's very challenging. The risk models I don't think even in a worst case scenario are going to be, modeling 2, 3, 5 years of tariffs that could really drive the markets down. I think there were some scenarios being modeled originally that were that long. And I just think, even if they go into effect, I think probably the models are going to view, a max timeline of the tariffs being in place at higher levels at 6 months, maybe a year. And I think that's a very different kind of model than one that has to potentially say, will these be in for years?
And we mentioned in the newsletter how, and you've been talking about how like the retail trader has been largely driving the market recently and some of the moves. And I think it's about 25% of the daily volume now is retail investors up. It's doubled since like pre-2020 levels. Is that to do with like, I think they're typically in the summer, there's a lower volume in the overall market. So, all the institutional investors are on their vacations for the summer. Do you think when we hit like September, that number is going to drop of retail percentage because there'll be higher volumes for institutions? Or do you think this is a sign of things to come and retail can like kind of maintain this more grasp on the markets that they've gotten recently?
No, I think that this retail thing is here to stay, and I think there's two components to it, right? I think the first component is that we're just seeing a wealth transfer, right? We're seeing boomers get older, and either dying and passing money on to their kids, and their kids, like younger people tend to be much less passive investors than other generations. And then I also think, and I've seen this a ton, of people just being like seeing younger generations do well, picking individual stocks, buying Palantir, buying Robinhood, buying Nvidia, right? Buying crypto. And I think they're shaking loose money from their parents, from their grandparents. I think there's a little bit of like, or even their parents still have the money and they're convincing them to say buy, crypto assets, right? Which also drives up stock assets like Coinbase, MSTR, Robinhood. I think is being driven a lot by cryptocurrencies. So yeah, I think I think that's a trend that's going to get even more. I wouldn't be surprised in 5 years to see that number above 30%.
So Ori is back in the comment section. Hello, Ori, asking about, could you explain the reasons behind Palantir's sharp rise today? And I will add to this question because I saw there's some Russia tensions maybe building now. And I'm wondering if Palantir is capitalizing off of that more so than like Lockheed Martin, Northrop Grumman, and all those companies. Do you think they're getting the benefits of that even more so?
I mean, I just think it's a bull day, right? Even in our portfolio, AppLovin, ASTS, Robinhood, like just in our portfolio of 7 stocks, Palantir is the 4th best stock today. So I wouldn't call it a sharp rise in terms of how other growth stocks are also rising. It's a good day for growth. It's been a good 3 months for growth stocks. So I don't necessarily think there has to be a particular reason. I will say I do think one of the reasons that we love Palantir and we say this is like if there are military tensions that would affect growth stocks downward, Palantir has better support. So I do think that's a reality, but I wouldn't call it a sharp rise. I would call it a decent rise for a growth stock when growth stocks are doing very well today.
So since we've started our stream, all of the markets are now in the green. So the Prospero bullishness is catching the overall markets. But I see we have another question before I move on from Yitzi on YouTube. Will UNH go back up in the next few days? Asks Yitzi.
I want to check on a few things. One, it's net option sentiment, not a good trend if you look at it. So I always say direction on net option sentiment is important. Meanwhile, look at upside is down, downside is up, net options is down. That's not a positive trend. And then I'd also suspect, healthcare is the 4th worst sector today, right? So, I mean, I don't know, will UNH go up in the next few days? Anyone that's telling you they have like a short forecast on a stock with any kind of confidence, they're giving you false hope. Nobody knows what's going to happen in a stock in the next few days. Do I think based on where it's at, UNH will have a good, 3 months, 6 months? Probably if the healthcare sector does well, but it has been lagging a little bit. But directionally, I'm not going to say it's going to do poorly or good over the next few days. But I will say I do not like the directionality of the signals. So I wouldn't be hoping for, positive directionality of a stock. I actually think it opened today at 95 net options. It's at 83. I kind of think that's not to be taken lightly.
So I feel like we've had a lot of new people joining the Prospero community, and that what you're hitting on there with the directionality of the signals, I think that's one of the hardest things for new people in the app to understand. So maybe it'd be worth it for you explaining why that's so important to you, why you're looking at not just, oh, did we lose George? I think we lost George. All right. It's just me. George will be right back, I'm sure. He must have gotten booted out or something. Oh, George is back. We got you back?
Cut out. Yeah.
Okay, so I was just asking, like, maybe if you could explain more so, like, why you're focused on the direction that, like, the net options level is going versus just, like, the overall raw score. For new people, I think that's a tough thing to, like, get at first. So hearing you explain it for some of our newer audience might be worth it.
Yeah. Well, the directionality of net option sentiment is the most, I would say that's the most important thing because it's volatile. And like you have to look at, I look at it this way. I'm always comparing stocks, right? And is a jump from 95 to 83, is that a catastrophic fall for a stock? No. But I've got 7 longs in my portfolio. And that's a bit like, I bet if I looked at any of the other ones, they're not falling. Maybe they're rising and they're certainly not falling 12 points, right? It's all about relative value. All things equal, I'd much rather a stock going up 12 points in the option sentiment. I'd rather own a stock that just went from 73, or sorry, from 70 to 82 today than a stock that went from 95 to 83. You know, that rise, that positive momentum in institutional options bets is important. And you might say, well, it's the same number. Why does that matter so much to me? Or they're similar numbers. Well, it matters to me because I could look again in 20 minutes and all of a sudden, you know, the one that was at 70 and is now at 82, that's at 88. And then the other one's at 78. It could be just like directionality in the options markets is so important, and it's so algorithmic as well. So once a stock starts to decline, you know, the demand for options, the prices start to change. That can in and of itself create a cascading effect. So, you know, I think that that's very important to look at. You know, any stock directionality is important. Dark pool directionality is important, even though we don't have that as a time series. What stock am I most bullish on? I mean, Meta is always a safe bet. Meta, Nvidia, in terms of the larger cap ones, are probably the ones that I'm most bullish on. But I like everything in our portfolio. You always look in our portfolio. That's the answer to the question. Whatever I currently have in my portfolio is what I'm most bullish on in the next week. So anything there. But probably, you know, Meta, Palantir, Robinhood, ASTS, those are the stocks I'm most bullish on right now, with where ASTS is probably like in the riskier, higher upside bucket. But the easiest one to say is Meta. I think that's the safest stock that I think has high upside right now. And it's frequently at the top of our signals, at the top of our screeners. It's kind of an easy answer for me on that.
Ori is asking in the chat about Lemonade, LMND, which is a stock we haven't really brought up on the streams before. Is it on your radar at all or interested in it?
I think Root is a similar business that I just saw in our positive things. And if you look at it, that's not a good trend on that option sentiment. It's pretty bad. It's at 65. It was at 80 July 1st. Upside headed down, downside headed up. Those are bad trends. But if you look at Root, that's in a similar business, way better trend, 90 net option sentiment, 82 upside, downside going down a bit today. Like Root looks like a much better pick versus Lemonade. Similar business too. And that's what we always mean by relative value. You have to look at things like that. I would never look at Lemonade without looking at Root first. And well, you know, you could talk me into Lemonade if it was still at 80 net option sentiment. The fact that Root is at 90 is so important. That makes it the better pick.
So we have some big events coming up this week, the first of which will be tomorrow, CPI tomorrow morning for June. Any expectations on your end for that? And then we'll get into more of some of the Jerome Powell swirling headlines that have been flying around the past couple of days.
Let's see FedWatch. I think people are starting to say there would be a cut. But I'm not all that sure. My connection's been good today, right?
Oh yeah, crystal clear, sounding good.
No, I'm testing very low upload speeds. It's odd. Let's see FedWatch. Yeah, it's going weirdly slow. Okay. Yeah, 95% chance that there isn't a cut. So yeah, if that's where we're at, there's probably, in all likelihood, not going to be a cut. When there's not a cut, I don't expect, like, the market's been doing so well, it doesn't need a cut to stay excited. So yeah, I don't have high expectations for a cut
So on Friday
or a
there
strong
was
market reaction.
On Friday, yeah, I feel like we in the beginning of these streams history, we're like watching every CPI so closely. Now we watch them like kind of less. But on Friday there was a headline going around of like a document of a Jerome Powell resignation letter that was like, I think it was fake to be honest, but it was making the rounds. And then today the Fed got criticism over like a plan for like I think a $2.5 billion renovation of like the Fed buildings from Trump. Trump was really complaining about them. So, and obviously he's been putting on pressure on Powell for like his whole tenure in office now. So, what do you think is like do you think Powell is going to serve his full term? And if he didn't, would that be bad for the markets?
Hard to say, right? I think it's more likely than not that he's not going to serve his full term, but I don't believe any of those resignation letters or anything. But at this point, the way Trump's talking and the way he's talking about rate cuts, like, I think it would undoubtedly be him resigning would be bullish. But the other side to it is it might be bullish, but we might be setting ourselves up for more pain long term, right?
Yeah, I would just be crazy to see like if at the next Fed meeting Jerome Powell is like, and at the end of it just like, and peace out everybody, I'm resigning as Fed chairman. And then I don't even know how it works. Like I don't know if Trump gets to directly pick the next one, or does Jerome Powell get to like kind of pick his successor for the rest of his term? Maybe there could be more drama there. I think we're in uncharted territory at that point.
Yeah, it would be interesting to see that. I definitely think so.
So earnings are officially kicking off this week with a lot of the bigger companies going. A lot of the banks, JP Morgan, Goldman Sachs, Bank of America, Wells Fargo. So all of the big banks will be reporting. Later in the week, PepsiCo and Netflix are going to be reporting as well. Which ones are you more focused on? Which ones do you think have the potential to move the markets? Are you even worried about earnings at this point? I feel like there's so many different headlines in the market today. It's like earnings are they going to be at the forefront or the backseat of like the coming weeks?
I mean, I think it's going to be really interesting. We've talked about this before. There were a lot of companies that didn't give guidance because of the tariffs. So I think because of that, the ones that start to guide again, it's not like they're going to miss guidance. I just think just having guidance will be helpful. And I also just think the other thing is now they can guide to higher profits, right? Lower taxes means you can guide to higher profits, higher earnings per share. So I think that's going to be huge. I expect this to be a very good earnings season. The earnings seasons have been great. I mean, maybe there's going to be some issues for retail stocks, but anything else, I'm expecting a lot of strength.
From all of your answers, it kind of seems like you're beginning to be like almost very bullish on the market. Like you see a sustainable like bull market, and I guess it all comes back to the bill that was passed. I would imagine like you mentioned in the beginning of the stream how the floor has just been raised. So
Yeah, I think it's the bill. I think it's consumer confidence. It's investor confidence around there seems to be a lot of retail investor confidence. If there's retail investor confidence, the institutions kind of have to play that, especially the extent that they do. And I really think valuations. I think perception around valuations. I think there used to be like a lot more like curmudgeonly institutions that were just like these valuations are out of control. I think everybody used to be a little more like Buffett. But I think more and more people are coming around to the idea that, you can value a company at a very like future tech at a very high, whether it be, quantum or nuclear or, even a company like CoreWeave that I think, as we expected is seeing a bit of a correction. But it's still at a crazy high valuation and there's still a lot of buyers at these levels, even as the stock, it's up today, even as the stock had, a pretty horrible week. People are seeing value. So yeah, I think, or I should say, people that weren't seeing value last week are seeing value this week, which is a big change considering how long it is until they're expected to be profitable. I think that it's hard, right? Because I see a lot of reasons there could be a correction, even a strong correction. But I think betting on that is betting on something that could ultimately miss out on a lot of profits. So I'm not doing that.
And with what we've seen in the net option sentiment for the QQQ and the SPY and how the QQQ has been so much stronger of late, and even like the single stocks that are leading the way, Meta, Nvidia, all at the top of the signals, if we're just starting a new bull market after that early April drop, do you expect it to be very similar to the one we saw for the like 2 or 3 years prior, where it was all tech leading the way, AI adjacent, or do you think another sector can like become a leader at this go around, maybe the defense or anything
No,
else?
I mean, I think AI, I think defense, I think account company like Palantir, that's like a hybrid of both, Big Bear AI, companies like that, I think you can still expect them to be leaders. I mean, even in things like ASTS and, Rocket Lab, I think they're a little bit like, they're a little closer to happening than say like quantum computing or flying cars. So I think they're getting a nice premium on future tech that's a little like, maybe more near future tech. But yeah, I mean, AI is real. It's here. And, I think companies like NVIDIA, now that there isn't kind of like the international trade cloud over them, are going to start seeing some very good earnings days. Well, I mean, shouldn't say start, are going to see some big earnings days.
A continuation of like, I think, what did you say? One of their earnings was like the greatest you've ever seen or something in the
Yeah.
past
Yeah,
year.
exactly.
That's a high bar to keep holding when you're NVIDIA, but we will see. So we have some acquisitions in the AI space, which seem to have been like furious of late. We've seen Meta making a lot of moves. Now Google is joining in. So Google is paying $2.4 billion for the rights, which are non-exclusive to the tech of a company called Windsurf. And they're also hiring several of their senior employees and their CEO. And then Meta is also making moves in the AI space again, continuing their flurry. So they acquired a company. Well, acquire is a weird term, but they acquired the team behind the company Play.ai, which created human-like voice generation. So I have a couple questions about it, but just first of all, we've seen these big tech companies get so active in the AI space. Why do you think that's happened as of late? Because I'm wondering if it's like within those companies, if they're not seeing the innovation and the progress, they're looking to go outside now. Like they're thinking we can't allow this, or is it just that the AI space is growing so much they just can't have enough like tech or possibilities? So which one of those do you think it is? Like a little bit of lagging or just excitement?
Well, it's an arms race, right? And a talent arms race. So I think there was a perception that Meta wasn't in the same class as, Microsoft or Google, or even Amazon with their good acquisition of Anthropic. So I think Meta really felt like they needed to make waves, and that's why they're paying a big premium. but we're in a new age. And I think what's very interesting about it and why you're seeing, a focus on talent versus IP is that, there's pretty clear rules when it comes to software, and software IP is not very friendly towards the current owner of IP. Like if you have basically the same idea or a similar idea and you've coded it originally at your original company, and then you just go and start from scratch and code it, with enough differences at the new one, then you're basically not violating IP. With the speed at which things are changing, the actual code that you're writing is less and less, right? So if new tools come out and you're just very smart at using the tools, building, combining them, which is what coding is becoming more and more, building, or building connectors between the two, maybe even writing some alterations to open source code that are unique to what you're doing, or maybe you have new ideas, all of a sudden the people are becoming a higher and higher value, as you kind of have to code less, and as people are making new things on the cycles of which new technology allowing you to create new code, new technology, you're just accelerating. So the people become that much more important and that much more expensive. And the other thing, in addition to all that, is, recruiting is an important part. If you have a leader that's viewed as a visionary, people are going to want to follow, be a part of what they're doing. And that's, part of the arms race. So it's very, we're going to see that continue. But what I would say about these like prestige hires is it might be more about prestige. It might be more about the perception, Meta wanting to attract people to buy its stock and the value there. Because the reality of the situation is, what is the real drop off between maybe the 10th best AI coder in the world and the first, or maybe the 20th and the 10th, right? You might be paying a fraction of the price. So at that point, it might be more about perception and what you're buying there. But it certainly is an interesting time.
Well, it seems kind of ironic and a bit contrary to like the overall mindset of like how AI is taking all the jobs, and what you're saying, like people are becoming more and more important. That's why these companies are acquiring the team and the people behind the tech right now. And it makes me think, how long can that last before the AI they create is just better than them, and that's what the companies are going to be focused on. But yeah, everybody's worried about AI replacing people, but you're saying people are becoming the premium at the moment.
For now, right? Because not everybody knows how to use and improve on the open source stuff coming out. And part of it, like I'm saying, is just prestige, recruiting, all that stuff. But yeah, I mean, I think that's the other part of it, that people view it as only a matter of time before the code is just fully writing itself, right? So that's where the arms race is. It's just like, everybody's trying to get the talent, the high level talent that's going to create that kind of like sentient AI, be the first one there, because that'll be a huge advantage at that point, but also scary. We talk about it all the time, right? We have all of these different teams basically hurtling towards creating a super intelligence that they have no idea, what it's going to do. And it is kind of silly to think that you could create like a super intelligence god sentience and then just be like, okay, we want you to figure out how to optimize, just optimize these ad deliveries and user engagement. Like the idea is kind of contradictory, right? Where you're just like, we're basically going to create a god, and then we think we're going to like, this god is going to like do what we say. But I don't think anyone's thinking about that. I think everybody's just thinking about, like, I think they're probably just thinking about, how much is my company going to be worth if I create the god? Maybe I won't be able to control it, but I'll be able to say I created it. And yeah, it's. I used to look at it and say we were farther away, but that's getting a lot. That timeline is it's just shrinking. It's shrinking, and I actually think the main thing that it's missing is compute, right? I think right now these LLMs can only process so much information, right? But we've talked about this all the time. I've talked about the show, person of interest, and I don't think we necessarily have the computing power for a computer to understand what's going on and like all the camera data, around the world that it can access that historically and use that to predict what people are going to do, and maybe in an even bigger step start to try to control what people do by taking actions itself and creating a future, right? I think right now the code is in place to do that. There's just not enough compute to analyze that big of a data set. So that's where something like quantum computing comes along. But, I don't think I would have said the only limitation is compute about a year ago. These programs are demonstrating a lot of creative thinking, a lot of intelligence. Even that story that we covered like a month ago, where the computers were trying to like blackmail people at work to get benefits, to keep themselves alive, to do that. That's a pretty advanced and scary tactic that denotes a lot of intelligence and a lot of awareness of its own life and sentience. That's pretty terrifying, actually.
So it seems inevitable that at some point there will be like a fully AI run company. Do you think that to be true? And then like how many years away, or decades, if you think it's even longer, do you think from that being like something that's around, a fully AI run company?
I don't think it's even about an AI run company, right? It's like we're saying, like at the point where you have like a super intelligence of that caliber, like just thinking you could tell it to run a company and that's all it's going to do is kind of, it's kind of conceited, right? To think that you could create something that smart and just be like, okay, now it's your job to run operations for Meta, right? It's probably going to have bigger ideas than that, right? I mean, if you think about it, even if you try to get like a smart, creative person, most of them don't function at like large organizations, right? And there's a lot of CEOs that can work well as in a private company that don't do well in a public company because they're not good at operating in that box. So it's kind of silly to think that you'll be able to just be like, okay, just run this company, and it's not going to have bigger ambitions than that.
That's a scary thought process. But last question on this AI topic, because we were covering Google and Meta making more moves. How come Apple, which is seen as like probably the worst performer within this whole AI space of the mega caps, how come they're not making like rapid moves like we see Meta and Google making? Do you think there's any like specific reason for that? Or could they possibly have big plans behind the scenes that they just haven't unveiled yet? Or what's going on there?
They just lost their head of AI to Meta, right? I think it's really that simple, and we talk about it all the time. It's like Apple is in a downward spiral. They've had some bad forays into R&D, right? And this is where we got to give Zuckerberg, we give him tons of credit, right? He had a horrible foray into R&D, right? And you have options there. If you have a bad foray into R&D, you can say, all right, we're not going to take any more risks because we're worried about the perception around this. Or you can say, we're going to take more risks and change the perception, right? Apple is very much category 1 and Meta's category 2. And that's why Meta has completely taken around. I think Apple, because of the perception that they haven't done R&D well, now they are not taking risks, right? And I think Tim Cook has become pretty risk averse. And that's why I said last week, I think he might be the first person to be gone, right? Because they need to start taking risks again, and they're not doing it because they don't want to say we spent all this money. They did it with maps. They did it with, the VR headset didn't do well. They had the car, right? They've been taking risks, and those risks haven't paid off. So now they're hesitant to take risks, and it's a bad, bad time to not take risks. I mean, and it's just like they were even early to Siri, right? they had the data, they had the training data. They could have been the first to this if they did it. But they clearly don't want to take the risk, and it's a little late now, and they're just kind of turtling up.
So we give Apple criticism, and I feel like I got to bring up, because I was at something on Friday and someone was working at or works at Snapchat, and they were talking about the people within the Snapchat are kind of losing faith in the CEO. And I'm wondering if Evan Spiegel deserves some criticism, or just, I don't know what your thoughts are on the fact that their stock has not worked, and they're not like a new company on the market. They've been around, they've had opportunity, haven't been able to make it work. So I feel like they could have been in the AI race, but they don't seem to be anywhere close to that.
I think he's the perfect example of a CEO that had some success early and then thought too much of his product and himself, right? He started to get a lot of public attention. I think he married a supermodel or something like that. And I think he started to just like to eat his own cooking a little too much, as one of my investors says. One of my investors says he likes that I like to eat my own cooking. but that could be dangerous in too high of a dose. So yeah, I mean, that's like, they're not even really trying to innovate, right? I think that they just thought their product was so good that people would continue to use it. It got ripped off for sure, right? It got ripped off by a number of things, but that's what we always say. You have to keep innovating. You can't rest on your laurels. Every business, no matter how big, has to keep innovating. I don't even know if they're trying to innovate. Like they might be rolling out product features that just aren't working. But yeah, I think Meta offered to buy them at $1 billion or something, maybe $4 billion or something like that, and they should have taken that. What's their market cap now? 15 billion. All right. So they're still doing better than that, but yeah, I'm not sure what the long-term plan is of it. I'm not sure where their users are, but I don't think they're necessarily in great position.
I mean, I'm just looking at the chart of them hitting like $85 per share in late 2021 and now at $9, so almost like a 90% drop. I did see a story how they're making like similar AI glasses to like Meta, but I don't think they're available yet. I have seen a lot of people starting to use the Meta AI glasses, especially for like social media content. Like people wear them and they capture great footage, great audio. So it seems like those Meta Ray-Ban glasses are starting to catch on a little bit. It'll be interesting to see, because I feel like they're still on the very early generations of them, how much better they can make them and how many more.
Yeah, I've seen them around for sure.
So I want to cover today as well, going back to the Amazon Prime Day stats, because we covered last Thursday when we were live. I believe only day one were out at the point, and they were very bad. I think they were down like 40%. But we had mentioned how since it expanded from 2 days to 4, maybe people didn't feel pressure to buy on day one. So now, after it has all said and done, Adobe Analytics has tracked a record $24.1 billion spent over the 4 days, which is equivalent to more than 2 Black Friday spending days, which last year, Black Friday, which they're counting for 2 days now as well. So it seems like all these single day events are becoming more, but was 10.8 billion. So it seems like a success for Amazon in the end, and not the weak consumer that we were kind of wondering about after day one analytics came out.
Yeah, I wasn't super concerned. Like we were just kind of joking about reasons for it, but at the end of the day, like Amazon's a machine, right? Don't bet against them. They just like at the end of the day, like they've just created such a strong moat, like the convenience. Like I've even talked about stopping to use them, like, but even just that, like thinking about ordering local, it's like it's so much work versus just like there's now these like overnight deliveries where you do like a $35 minimum, you can get it. Like it's crazy how convenient it's gotten and how well they do. Like it's the only product, like people are generally, I'd say, okay at like voting with their dollars, where if they don't approve how a company is operating, like will generally be decent at not giving them money. But I would say when it comes to Amazon, like so many people have problems with how they operate and still use the product and use it often. And I think that just says how good of a product it is.
So this was the 11th Prime Day event this year. And I think the last time they went from 1 to 2 days in 2019, I believe. They went from 2 to 4 this year. So try to predict, when are we going to get our Prime week? Because we know it's going to expand in the future. What year do you think? How long do we have until Prime Day becomes Prime week? Try to take a guess.
Or just like, I mean, I don't really even know. Like, I don't know, because I think the longer you make it, the less special it is. And they've got to like, they've got to create that urgency. But where I could see it going, and they do have like product testers and stuff, I think what's more likely is that they start to get like their bigger buyers into like a permanent Prime week type thing, right? Like if you're in the upper echelon of spenders, you just get bigger discounts and they incentivize it that way. Like I actually see that being more likely than just extending, because if it gets big enough, right, long enough, then you're just like, oh, whatever. It happens 8 times a year for a week. It doesn't really say like, okay, I'm going to spend now, right? So they've got to balance that. But I do think there's going to be additional perks, or I think at some point they're probably going to have like a more elite. Maybe you spend like, maybe instead of $100 a year, it's $1,000, and you buy into just steeper discounts. Like steeper discounts, maybe like a concierge service, right? I could see, instead of having to go to UPS, right, someone will come to your door and grab the product if you want to return it. Like I think that's where we're going, that level of service. Or maybe it's not a person, maybe it's a little robot. Maybe you'll be the first one to test, like a little drone flies into your apartment and you just hand them the product and then they instantly process your refund.
So I want to move now to Warner Bros. Because they had a box office hit on their hands over the past weekend. Superman did very well. I'm sad to say the local movie theater near me is closing down, so a lot of people around me are bummed. So that we're not going to get to see Superman in my neck of the woods. But I'm wondering, how important are the box office numbers to these like mega content companies, Warner Bros., Disney? Like, from Warner Bros. Having a hit movie on their hands, do you think that instantly changes the short term for the stock, or is the market much more focused on streaming and, other, cruises, parks, whatever the other aspects of their business are?
I think the market's more focused on streaming. I think it helps. I think, we're never going to be at a point where people are going to be ignoring this stuff. But I think at the same time, it's becoming less and less important. And I mean, it's like, I feel like all they ever make is superhero movies anymore. But I also think just like movie theaters as a format are going to become less and less popular.
Superhero movies is definitely where the money is, because I think Scarlett Johansson just became the #1 grossing actor or actress of all time, and they showed the list of like her highest grossing movies, and they were all like Avengers and Jurassic Park, I believe. So, but good for her. I think she is officially #1 in the record books right now. But yeah, you're right. Superhero movies are definitely the ones that get the attention nowadays. We have one more topic to go over today, and that will be crypto. But before we get into that, we are approaching close to 2,000 viewers total between Twitter or YouTube. If you've liked the topic so far, please like up the stream on either platform, whatever you're watching on. If you have any questions, stock-specific, AI, business, macro, whatever, let us know in the comments, and we'll be happy to get to them. But I want to get into crypto again today because over the weekend, as the markets were closed, Bitcoin was hitting new all-time highs. I think it got as high as 123,000 at one point. So a big breakout going on currently for Bitcoin. I'm wondering, what are you most bullish on surrounding Bitcoin right now? Would it be the miners? Would it be Coinbase? Would it be MSTR? How are you feeling about that whole crypto sector at the moment?
Before I get into that, I want to say, like, to the people that watch us on X, I know we have a lot of X watchers. Um, Next time we start this up, consider retweeting it to your followers, right? I think a lot of people see the value in this. We'd love to get more of X watching it. So, think about doing that next time. We'd appreciate it. We really, we want to spread the message, teach what we teach to as many people as possible. So, on the one on Wednesday, we're back to the normal times. Would appreciate you coming, retweeting it out, letting people know about it. Now we'll give the crypto answer. Stocks like MSTR that we've gone to in the past, their upside just isn't as high. Like, we actually think Robinhood is a great way to play crypto, given what we said a few weeks ago in our letter, that we also think there's a lot of retail upside to it. We like Coinbase, right? I think those are the two best ways I see to play crypto in the markets, because you can get net option sentiment on it, and it's a little more reliable, I think, than MSTR. But yeah, hard not to be bullish. What we were talking about, I think there's more money going into crypto, the wealth transfer to future generations that we're talking about, that's going to put more money in crypto. I think kind of the sky is the limit to crypto, similarly to the market overall, but I think it could even do, better than the market overall easily. But I will also say this, like, I could see Bitcoin going up 20% and Coinbase going up 30 or 40%. So I think you get perhaps even more upside, and more downside protection. That's why we really like something like Coinbase. Same with Robinhood.
It's going to be interesting to watch Bitcoin and crypto over the next year, because crypto has had this 4-year cycle, and the rest of 2025 is kind of like the ending of the bull cycle part of it. So I'm wondering if the market continues to go higher, will Bitcoin and crypto for the first time kind of just like not go through that cycle where there's been pullbacks like on these 4-year timelines? Can the market and Bitcoin like move in different directions? Or do you think they are kind of at the point now, Bitcoin has grown to be so big where it's going to move more like the market, the tech QQQ, than it has before in the past?
I think it's possible that if the market is a little red, that that crypto could be a little green. I think crypto could perform better than the market, but I don't see them diverging too far.
So Topher is in the chat on YouTube asking about Iron and Wolf specifically. He said ETC too. I know we were looking at some of the miners before the stream. They weren't looking quite as bullish as like Coinbase, in the signals. Or
Iron looks pretty good, but I just don't like it as much as Coinbase or Meta. I mean Coinbase or
Robinhood.
Robinhood. Yeah. But it looks interesting. I mean, it's for a $3.8 billion market cap company, the signals look very solid. I'd consider adding it, but I like those other stocks better right now.
I've been following the miners for a lot as Bitcoin has gone up, and I think a lot of people in the crypto who are investing in like the crypto area are a little disappointed with how they performed. But it seems like a lot of them like have a lot of share dilution, which is just kind of wrecking the performance of the overall stock. So I guess that's a risk that a lot of people aren't thinking about.
And retail hates dilution,
Mm-hmm. Yeah. Topher said SoFi XYZ. Any thoughts?
We like SoFi, but SoFi I view as like a less upside Robinhood. XYZ is all right. We got burned on it a little bit. We still have to get it added to the system. But yeah.
All right. If there's no more questions, I think it'll be time to do the model portfolio update. Back in the groove here.
Yeah, hold on. I gotta make the switch right now. My tunnel isn't working on the other. Any questions to answer while I'm waiting for my tunnel to do its thing?
Let's scan the markets and see if there's been any moves that we could cover. We'll check out QQQ and SPY and option sentiment also, see if there's been any switches. QQQ is at 52, SPY is at 9, So SPY is coming back up from where we saw it at the beginning of the stream, just a little bit. Bitcoin is actually now down 1% now on the day. Let's see if the overall markets are still, yeah,
Wow,
they're still in the
interesting that
green.
Bitcoin's down, but that miner IREN is up 6%. Normally, you don't see that kind of divergence.
I'm wondering if, since Bitcoin's like 24/7, it makes its move on the weekend, and then people are like selling their Bitcoin profit to buy a market that wasn't up over the weekend. If there's kind of a little bit of changing of flow there.
Yeah, it could be.
Circle is up 5%, which we've covered them and CoreWeave together today. But
CoreWeave's having a good day. I don't know if I want to get out of my position, but I might exit. What?
Palantir is up even more now. They're up almost 4% on the day. What a beast of a stock.
Doing very well. Yeah, I'm starting to do the letter. All right, SPY is at 9. QQQ is at 50.
QQQ 52. Yes, SPY 9.
That's very similar to what it was in the last week. Let me see. When was the last momentum scored? Interesting.
We were talking about Root before. It's now officially on the short-term bull list of picks in Prospero.
Yeah, I saw that. I am not seeing. I'm not seeing this working. I'm going to give it like one more minute, and then it might not be able to update because momentum score is not producing a result.
Well, maybe I should mention here, if anybody's not a newsletter reader, I think we offered a discount in our Sunday newsletter, didn't we?
We did, yeah. You can get 20% off right now.
So you guys, you might want to act while you can. How long does that last? Like a week or?
Yeah, 1 week.
All right. So I'm putting that info out there for you guys, trying to get you some.
Yeah, and if anyone emails me while I'm waiting for this to work, I'll give you a 30% off discount.
Oh,
either the letter, right? Come on down.
George at Prospero.ai.
Yeah. Come and get your discount. All right. I don't think we're going to do the update today because of the pesky. This momentum score is being pesky. But thanks for coming, everyone. Nice to get back in the swing of things. Regular times.
Yeah, we'll be back Wednesday at 3 p.m. with some earnings updates. CPI will be released, so it's going to be a great stream. Hopefully to see everybody there. Thank you for watching. We'll see you all soon. Thank you, George. Thank you, everybody. Bye, guys.